Welcome to Technical Market Insights, ladies and gentlemen. We are going to take a look at the stock charts. We had a great week last week, and we anticipated the weekly charts to bounce, but SMH did break a top trend line, which we did not expect to happen. But hey, I hope a lot of people made money last week. And as always, we keep two separate accounts, one long term. So we always like to see the market go up. Actually, I have a total of 5 accounts if you include my 3 custodial accounts, and then a long term and a trading account. And make sure no matter what you subscribe, because coming this year, we are going to have an educational account where we are going to fund it with about 2K. And you should always be putting income into whatever account you're trying to grow. So we are going to, come January, fund a, I'm going to call it a hybrid account where we're going to have some long-term plays in there, some trading. Definitely do a lot of trading, and we're going to see how quickly we can grow that account. We're going to add 10% of our income every pay period, and what kind of year we have. So right now, let's dig into SMH. As we can see, the weekly chart bounced. We've been calling the weekly chart to bounce actually since over here. We explained it bounced there, but not as strong as we thought it would, and it didn't last as long as we thought it would. So it retraced back into the oversold territory and ripped out the last couple weeks. So last week, SMH alone did 5.2%. Week prior to that was 8%. So if you was trading this based on the weekly chart being oversold, would have been a great trade. You would have got in SOXL. And let's see. So you bought over here, been up about 40% in 14 days. Man, what a trade. 40% in 2 weeks. And we went over XBI, the trade you would have been in on that when we called the support here being caught. Now look, that has pulled back quite a bit, and we did call that as we expected the whole market to pull back last week. We knew the weekly charts was going to rally, but we were looking at the daily charts. We figured they'd pull back a little bit because they were overbought, but explain, just because they're overbought don't mean they're going to pull back. Just because they're oversold don't mean they're going to go back up. That's just technical points for me to lock in profit or go ahead and buy. So let's go back, take a look at SMH real quick. This is a semiconductor ETF. And as you can see, if you had been trading this on the daily trade, we wouldn't have traded this. We would have been trading SOXL. If you know how we trade here, we trade the leverage version on any ETF. So that made a great bounce off the 200-day moving average from being oversold. And looks like over the last couple of weeks ran 15%. Like we said, would have gave you a good 37% in SOXL. Those are the kind of trades we're going to be making in January. Live on the account, we're going to be transparent as possible. We're going to see these markets, see what we can do with these swings. All right, so SMH ripped last week. Now, ladies and gentlemen, this would not be a buying opportunity, right? We buy when it's oversold. Now, what people do here is they buy on FOMO, fear of missing out. One thing we talk about in our book and on the channel is to avoid the fear of missing out. Always have 2 accounts, right? You have a long-term account where you just continue to add to your long-term positions and you hold them. I always look at 10-year spans in that. For instance, the stocks that I put in there, one that we're loading up in 4 of our accounts is BWXT. We've been loading up since January. We buy every pullback in our long-term accounts. There's a few I'm watching. In the cannabis sector, as you can see, that's had a big pullback. over the last couple of years, and we're waiting for some swings above the 200-day moving average. We have some ETFs like NRL. Oh, NRL. NLR. I'm sorry about that. So we hold nuclear energy ETFs and single stocks. I'm just kind of going through some stocks I have kind of been holding for the long term, water, things like that. We look 10 years out when we make investments, and we look at bullish charts, and we add on pullbacks. That's what we do. Now, the hybrid account coming up next year, we're going to do all this in one account. We're going to have long term stocks, and we're going to have the swing trades in the same account, and we're going to see how quickly we can grow that account. And it's going to be based on the principles in both the books that are out. Simplified Profits. If you haven't picked them up, pick them up. You can get them on Amazon. Real nicely organized. Everything we go over here on the channel. All right, so the Dow Jones, that popped above the 200-day moving average. SMA, just to hit that real quick. I know I keep bouncing back and forth, but ladies and gentlemen, I mean, you're talking maybe another 2% before we're at all-time highs. I would be very cautious right here unless you think there's some reason. And keep in mind, the semiconductor ETF is heavy in NVDA. So you can see how that lines up almost perfect with SMH's stock chart. So depending on what NVIDIA is going to do is what SMH is going to look like. So it could break the new highs and take SMH with it. Now, that's just to be determined. I'm not a believer, but I will swing trade this as much as possible. And you can too if you just know what you're doing. Right? We would enter when it's overbought. We would have been stacking up right around here, and we'd be locking in profit probably right around here. I'm sorry, buy when it's oversold, sell when it's overbought. So I'm not a buyer here. I'd be taking profit. Do what you like. Hold on to it. Maybe it just rips past these highs and takes off. But look at this monthly chart, ladies and gentlemen. That is that's strong. Strong V. I would like to see a healthy pullback to this area, and we may not. So regardless, there's always opportunities in the market, and the Qs look pretty identical to the semiconductor ETF. This is a technology ETF. Last week it was up 3%, and the week before it was up 6.5%. So another great week. Weeks were bouncing out of the oversold territory. Oil. So oil was one we definitely need to touch base on because this was oversold here. And it was a buying opportunity. But as always, we like to see it touch the bottom Bollinger Band. And as always, I do not trade commodities, which I've said a million times. I watch the chart on oil really. I mean, it sounds kind of dumb, but just to fill up my gas tank. I mean, I probably get gas every week anyway, but wake up in the morning, look at the chart. I know if gas is going to be up or not. Just that simple. And like I said, it might sound dumb, but I've actually done it for a while, believe it or not. So it retreated down to the 200-day moving average. It's still oversold. I would expect it's going to eventually hit overbought again. That's how that happens. Just natural swing. All right. So it may only reach 75 when it gets overbought, but I do believe with everything going on around the world, oil will go higher. We'll see. If you look at the weekly chart, it was overbought here, and we expected to pull back there. We talked about videos ago, probably right around this area, 922. So we did expect to pull back on the weekly, which we are seeing. The monthly chart, we've spoke about how it is at some resistance. I believe we'll see a pullback there as it is overbought. With the rest of the market, so oil, I would, if you got a position in it, we don't take losses, right? We manage our position to the point where we can take profit. So as always, you would, if you entered here, we never go all the way in, right? We would have maybe 20% of our portfolio. Now we would have been doing a leveraged ETF. So you'd be down even stronger. But this is why we don't go all the way in a position. It would have dropped about 10%. If you would have went in with 20%, you would have been able to buy that 4 more times. Now I wouldn't have bought right here because you wouldn't have had a reason. You wouldn't have been down that much. You probably would have bought here and loaded up right here. I mean, you could have your average actually probably right around 30 bucks, if not lower, if you're doing it well. And you'll be able to take profit when it gets overbought. That's what I'd be shooting for. Now, we did say XOP. We'll jump into that real quick because that is how we said we trade oil. And we said because, go back and watch the videos, it was not on the bottom Bollinger Band, enter light, and kind of pay attention. And I mean, you would have been up there for a little bit, and then it dropped like a rock. That's why we keep cash to scale and average our positions lower. I don't know how you would. If it was me, I wouldn't have bought this. I didn't buy it, for one. But it was one of the bullish sectors that was coming up in the bullish sector scan. I don't like really doing anything with oil. And as I always say, anything I trade or invest, I look 10 years out. I'm not bullish on oil or oil producers. I wouldn't want to hold them for 10 years. So I don't trade anything unless I'll be willing to hold it for 10 years. I've said that in many of my videos. So I'm right now big believer that nuclear energy 10 years down the road, especially Trezo fuel, which is why I'm been loading up on BWXT. That's the energy sector I've been focused on. So no, I would not have bought this because I wouldn't want to hold any of the companies in here for 10 years. I mean, let's look at some of the bullish ones. Yeah, I mean, you only got 3 bullish charts coming up in that ETF. So yeah, I'm not a buyer of that. If you were, so if you got in Gush XOP based on it being oversold, you're going to have patience if you didn't take profit up here. So I mean, you could have locked in about a 5% profit in 3 days. You probably didn't because you were waiting for it to get overbought. And now let's say, and you really wouldn't average down much until it dropped. It dropped as much as 10%. If you would have bought, you would have been able to buy 4 more times. Yeah, I mean, you're still in good shape, as always. It's really hard to find a trade that you buy when it's overbought or oversold, and you can't lock profit in when it's overbought. Now, this could be a beautiful double bottom right here at the 200-day moving average, and bam, that thing could be off to the 160 zone. So stay patient, which is one reason I only buy things I would hold for 10 years. It helps you with your patience. And always have cash to scale and average your position lower. So XOP, it's seen 7% loss last week. Oil, 4% loss last week. Jump into the Dow Jones back there. It only had 7.7% change for last week, and the week prior had a 5% change. So you can see here when it hit overbought, it kind of moved sideways more than anything. But as always, I would not be buying this market. I'd be locking in my profit. And anything we added in our long-term investment portfolio, we buy when it's oversold. So we added to those positions when the market in that position was oversold. And right now, this is what you're looking at. The weeklies have bounced. They still got some running to do before they get to the overbought territory. So you could see, now that can happen sideways as well. So you could see it just trade sideways. Is that moves up based on the average and goes down. As you can see right there, and look at that little section from the point it was about where it is now. I mean, to go back, look at your charts, pay attention to what's going on. But yeah, that's where we are. These weekly charts will bounce a little more. Monthly charts, I would expect to pull back to the 50s stochastics on these. But I mean, it could go back up. Regardless, we are trading only what's above the 200-day moving average. So we wouldn't have been in that swing. Now you would have made great. Just look at that real quick. This is our leveraged version of the S&P 500. You would have ripped 20% in 14 days. Now we would have been in SMH because it's over the 200-day moving average. And you would have locked in, what did we say, 37% in 2 weeks. That's the trade we would have been in out of our ETFs. Been watching that 200-day moving average, making sure it didn't break, which it could have easily. And that's what we said in our previous video. But that is the market. Let's look at it. This is our bullish sectors right now. So technology is popping back up in the bullish sector. And I think it's doing that because where the high is. So I will go over my scans in another video. Like I said, these are all my conditions. And on my bullish scans, I had like 3 different bullish scans. I end up combining them. I don't like the lower lows and the lower highs. So to me, it's not really that bullish, but there are some conditions I have that made this show up in my bullish scan. All right, and then we got consumer cynicals, what we went over in our previous videos. Those are your 2 bullish sectors right now. And these are our bullish ETFs. Let's take a quick look. All right, that's a leverage FANG ETF. If any of these, you can see them as we go. SMH is popping up on that. All right, it's going to be a lot of technology stuff that pop back in here. As you can see, looking at a lot of, there's a uranium one, uranium miners. A lot of it is technology based. Aerospace, I'm not bullish on that at all. Now there's 62 of these, so I'm not going through all of them. I'm kind of scanning them with my eyes, looking for anything that sticks out to me is something that would be tradable. Well, of course, none of them's oversold. So now here, these are our bullish oversold stocks right here. And the high cap 1000. These are buying opportunities as we would consider. But as always, just because they come up in the scan, you still need to look at the chart. You need to look at the stock as far as the PE. Make sure they're making money, right? When you buy a company, you almost want to think of it as if somebody walked up to you in the streets and offered you to invest your hard-earned money into this company. Would it be something you would do? And if it's a company that's losing money, you're probably not going to do that, right? I put my money to work. I want a good company that's making money. I want it in a sector I like over the next 10 years. I want it to pay me something on a dividend. And then I make a determination from there. But I definitely want a bullish chart to go along with it. That chart, I'm not a fan of. I wouldn't touch that. Even though it's going to swing, it's going to bounce. What the market does. Let's see what these are. These are probably oil related, just because oil is pulled back. Because everything else is overbought right now. So if I had to guess, most of the stuff that's going to pop up on this is going to be Oil related, aerospace, Northern Group. Yeah, I don't know. I don't think I'm buying that. Not a fan of that either. This has been a real bullish healthcare biotech company, but we don't deal in biotech. Much speculation. I mean, things like Lilly and stuff like that we do. So there's really not much out there as far as buying opportunities right now either. I would stay patient, right? If the market continues to run, we got our long-term investment account making money and our custodial accounts making money, so great. If not, we would be patiently waiting for the market to pull back to give us more buying opportunities. As boring as this sounds, I'm not trying to get rich overnight, ladies and gentlemen. I'm just trying to grind, grind profits over and over and over and compound over the long term. There's nothing, just kind of looking to make sure there's nothing we missed. Nothing we really missed here. Let's change this to ETFs real quick. Okay, so this is our bullish oversold ETFs. So these would be our ETF trades right now. Definitely a swing possible there. I don't like the drop, and I don't even really know what this is. See what it's holding. Definitely oil related. There's a bank in there. Yeah, I would definitely have to dig into that more. Not messing with these. No, so there's no ETFs out there right now really presenting any buying opportunities. And we could have easily done this as well and looked at them. Ladies and gentlemen, that is it. I do not see anything out there worth putting my money to work. My money is now sitting in the trading account. This portfolio 3 I put over here, that is going to be for the account we start come January. Make sure you subscribe. I'm actually kind of excited about that. It's been a while since I've built a small account. Um, Trading and managing larger accounts are a little different, but we'll see how quickly and how large we can grow that account. Not sure how long I'll do it, but heck, maybe we'll try to take it and just keep compounding year over year and just see where it ends up. Ladies and gentlemen, I am done here. If you have any questions, feel free to ask in the comments. Market could keep going up, ladies and gentlemen, or it could tank like a rock. Nobody knows. Only time will tell. But as always, have a strategy, know how to read a stock chart, know why you're entering something, and have a plan to exit with profit is the key. All right. Peace out. Have a good week. I'm out.